In this video, we're going to be talking about three key markets to keep an eye on in this highly uncertain inflation situation that we're dealing with at the moment. So the first market we can keep an eye on and is worth following is the pound. The currency market is highly impacted by interest rates, which have been the preferred measure of central banks in order to deal with the high inflation that we've been seeing. Inflation has been impacting all aspects of our life, between consumer goods, so that when we go to the store, we buy goods that are priced higher, but also the amount we have to pay for loans. We're seeing the effects of inflation carry over throughout all different markets. The central banks have decided that raising interest rates consistently is their key strategy and main strategy to deal with that. Consequently, what we are seeing is an appreciation of currencies based on that, because of the fact that higher interest rates tend to favor the currency. So we have seen the pound reach a multi-month high and stay strong against other currencies, even against the dollar, because of the fact that more and more interest rates are expected by the Bank of England. The second market we can keep an eye on and worth following for sure is the stock market, and particularly in the UK 100 or FTSE index. While we've seen some decent performance from these indices and stocks, it is important to keep an eye on the fact that inflation leads to lower amounts of currency in the pockets of all investors. So therefore, there's less money to invest into the stock market. And we could be seeing the effects of that as interest rates continue to rise based on what we've come to expect now from the central bank. What that would lead to probably is a rebalancing of the market and potentially even more volatility in the markets. Now, it is impossible to say whether the markets will go up or down, but it is definitely an interesting time to keep an eye on these markets because of the fact that so many macroeconomic factors are impacting them. And so therefore, once we account for all these factors, whether it's interest rates on one side or inflation on the other, the stock market in particular is one that is highly susceptible to these factors, whether it be deciding on the central bank side to stop the interest rate increases, which now again in the UK are prospected at 6.25% or even 6.5%. Keep in mind the fact that these reduce the amount of liquidity in the market that then obviously will go and kind of be distributed to different sources of investments. The low interest rates, in fact, that we saw at the beginning after COVID led to the major boom of the stock market that we saw. So you can kind of imagine what happens when interest rates then increase really rapidly and how that would impact the markets. The final market we can keep an eye on, and of course there are many more, but these are just three that we picked here today, is gold. Gold is the commodity of choice for many investors as it is considered a safe haven asset that is a more stable commodity when it comes to uncertain times, and that's definitely what we find ourselves in at the moment. Gold has had a mixed performance while managing to maintain a certain level and support resistance levels that have held both sides. However, interest rates do have a significant impact on the prices of gold as well because of its general correlation with the US dollar. Of course, the Fed, which is the US central bank, has decided to increase interest rates just as any other central bank, let's say excluding the Bank of Japan, which it's a different story for a different video. The Fed has decided to increase its interest rates, and that has had a significant impact on the dollar, which then goes and, as I mentioned earlier, correlates with gold. However, the Fed was also one of the first banks to start raising interest rates, which leads to now where we find ourselves at the moment. The Fed is approaching the end of its rate increase cycle, and many analysts are predicting potentially 2 more rate hikes before a pause in the cycle. That potentially could have a significant impact on the dollar once again, which we have already seen start to decline against many major currencies. Therefore, would potentially have an impact on gold. So as you can see, all these markets are really tied together. Following one will give you an idea of the other. Following these macroeconomic events and the news relating to central banks, again, all tied to inflation once again. So these are all markets that you can keep an eye on in a market of inflation and a climate of high inflation that we are seeing at the moment. The Fed has been quite successful at containing inflation. The European markets a little bit less so, obviously with their central banks, but there are other factors that play into that inflation, including the Russia-Ukraine conflict and other events. However, this is a general overview of what to keep an eye on. All these markets are kind of tied together, which is why we chose them. Hopefully this video was useful. If you enjoyed it, leave a like and subscribe. Thank you for watching.